Well, hello there traders and friends right around the world. It is James here on behalf of Pivot Point Trading, bringing you a second market update as at the close on Thursday afternoon. The reason for this video is to help explain really the market behavior, the market action, the price action which we have seen over the past 2 months and how it all fits into the world of technical analysis. And being obviously a technical analyst myself, it's very important that I explain how these concepts and how these different fragments of technical analysis come together to help explain what on earth is going on with these markets. I'm going to use the Dow Jones Industrial Average as the template for this quick discussion. I'm simply going to show you just how important it is. If there's anything to take away from this video, just how important it is to trade using confirmation based on price, and how of course we move with the daily price action each and every day, giving us an updated outlook, an updated perspective on just how to quantify the data which we are working with and to set ourselves up for and with profitable shares and profitable trades moving forward. Now, moving into the Dow Jones Industrial Average, there's been a lot of debate. It's quite contentious at the moment, nonetheless, on just what on earth is going on. I mean, originally we came into the month of March saying that, look, this is potentially what we call a double top. Now, double tops resolve themselves to the downside, but only when they break the neckline. We never broke the neckline. So that argument went out the window quite quick when we failed to break the neckline. The second argument, which we were talking about in March, was, well, is this more so a descending triangle? We're saying to ourselves, well, we've got the high up here, we've got the second lower high, we've got the relative support level through here. It looks awfully similar to that of a descending triangle. You can see the picture in green right here, or my illustration in green, suggesting that once again, when we break the neckline of a descending triangle, generally 60% of the time we will resolve ourselves to the downside. We had a similar entry for the Dow Jones Industrial Average, which worked with DIA trades or diamond trades. That never eventuated either. Confirmation was never given. Now, as I'm breaking down the Dow Jones Industrial Average and updating people in that pro analysis workshop, just what on earth is occurring? Why is the market acting the way it is? It really is starting to become apparent that we may be moving into a symmetrical triangle. Now, the difference between a symmetrical triangle in regards to both a double top, a leaning double top, and also a descending triangle is that a symmetrical triangle is more so very neutral. It's very, very neutral. If anything, it resolves itself in the direction of the current trend. Now, obviously, the trend direction has been up. It has been very flaky recently. You can see that we've been almost stuck range bound for 5 months. So here we are. We've got 1, 2, 3, 4, and the 5th month right here. We've been essentially moving sideways. But in the larger primary type of trend, we are still in a bull market, and we haven't got any confirmation just yet that we are breaking down, or at least having a correction in the market, even though a lot of people are calling for it, myself included, moving back to March and April. You can see how perspectives can shift over time when the market is giving you additional signals. Now, this isn't a market video saying that I'm moving into a bullish stance on the market. No, it's not like that whatsoever. I'm just trying to explain the price action of what is occurring on not only the Dow Jones Industrial Average, but for the S&P also, and most recently what is going on with the Nasdaq. Let me just continue with this discussion right now with you. Now, you can see that if we align the resistance levels across the top here, we've got a high in early March, we've got one in mid-March, and we're still failing to break above the resistance level throughout mid to late April 2015. If I draw on another line, and instead of this being flat, as what we've had for the double top and even the descending triangle, if instead I bring it up and we start to sort of quantify data such as this, you can really start to make the argument that, well, maybe potentially we're in a symmetrical triangle. Now, the good news about this is that we are getting close to the apex. You can see that we can only remain within this tight pattern for a limited amount of time before we start pushing the bounds of the upper resistance level and the lower support level. Now, again, this tends to lead itself to a bullish breakout. Will we see the bullish breakout? I'm not sure. We still have a lot of overhead resistance with the Dow Jones Industrial Average, but at least we can get a measured move. We can measure this area right here, and we can forecast it into the future to give us targets if, in fact, the Dow Jones Industrial Average breaks out. At the moment, I'm positioned very neutrally on these markets. I do not have a bias one direction or another. I've had contingencies in place if the market rolls over, and a lot of bearish contingencies in the way of market exposure and individual trades which haven't triggered. That's fine. But just looking at this again with a non-directional bias and just looking at the actual price action, which suggests that this volatility and the suppressed volatility moving more so into late April, there is a reason for it, and this becomes the most apparent reason for the current price action. I wanted to share this with you because a lot of people, again, are getting frustrated with the price action, and it's nothing that we as traders can do about it. It's more so the market whole. Until the majority jump on board with a trend, or they jump on board with one directional side of the trade, the market isn't going to trend. So until we start to break out, or unless we start to break down, again, I'm just sitting on the sidelines waiting for the market to give me clearer indication of what exactly it wants to do. Now, having a look at the S&P 500, you can see the same type of chart pattern. You can see that if I actually move the line back to late December 2014, we have some form of a support level rising up through this location right here. This is saying that yes, the buying pressure is to a degree becoming more and more compelling. We are starting to push above this declining resistance line, but we still have resistance, horizontal traditional resistance moving from left to right on my screen right here at the level about 2,120 on the S&P 500. Now, looking at the NASDAQ, this is what is most surprising, because this chart pattern in and of itself is extremely bearish, especially when you start tying in gaps and the theory on gaps, which we have. Trying to at least understand what gap is taking place at the particular time in a trend. Very, very important to understand this. Now, at the moment, the NASDAQ once again has broken out, albeit intraday. It's slightly closed above the March highs. We have a very strong resistance level. This is going to be the all-time high on the NASDAQ going back to the new millennium, right? 2000. Very, very important resistance level. So really the upside on the NASDAQ is limited, in my opinion, and at least short term. I understand that Google and Amazon is traded up after hours quite considerably at this particular moment in time, but I'm very interested to see how the daily candlestick forms on Amazon and Google. If the levels can hold, if it's a nice daily candle, it can suggest higher prices for these stocks. And I'll be the first to jump in on swing trades to the upside. I'm just a little bit hesitant because when you look at candles or earnings reports at Caterpillar, which is a great forward leading indicator of the economy, and you see a candlestick such as this after an earnings report, I'm just a little bit suspect on the overall market structure and the flakiness of the overall markets, which have continued for about 2 months now. For 2 months, we've been in this just ugly type of price action. When it comes to individual trade setups, let me just remove some of my annotations. Apple is reporting earnings on Monday, which will obviously be a market mover to a degree. So once we get through Apple, things will be back to normal in the way of our overall trade list, our top 13 list, which we cover in Pro each and every week. I'm paying close attention to what will be on Monday because it's exciting to see how this is going to trickle through to the NASDAQ and if Apple can produce earnings such as Amazon and Google. Outside of that list, we've covered a lot of other stocks. Boeing Airlines, since earnings, has been relatively flat. We don't have a clear directional move whatsoever. It's just remained flat. I will analyze this over the weekend. Same with Caterpillar. I've given you my thoughts in the pro private area based on the earnings candle, so please check that out in the private section of the website. CVX, again, it just appears to be flatlining at this location. There's been, again, continued speculation in the price of crude oil, how this is going to affect these types of companies. At the moment, though, we are simply running into resistance. And we do have earnings coming out early April as well. It looks as if it's going to be released on the 1st. So that is something to pay attention to. Also, in regards to earnings, Facebook is a very interesting chart pattern, which I'm looking at right now. You can see that we are creating almost a double top. Now, this is going back to the market discussion we've had on the Dow Jones, but you can see the rise, the fail, the rise, and what could be another fail. We've got a neckline present. Big surge in bearish volume today. The candlestick is just absolutely awful, given that earnings was reported. Absolutely awful candlestick. But when you have a look at IBM, it's a similar type of candlestick. Facebook is much more bearish. You know, you've got the beginnings of what could be some reversal chart patterns taking place on this particular stock. I'm not willing to short it as at Friday's trading session. I do want to see just a little bit more confirmation first, but it's definitely a trade setup which is brewing. Definitely brewing. I've referenced Google trading up after hours. GoPro is very, very flat. You can see that we're just grinding higher. I'm very interested to see how earnings or what the earnings actual announcement is on the 28th for GoPro. Either this is going to give us a new gap and goes type of directional trend trade, you know, moving higher back up to these old levels, or in fact it's going to spell quite a significant downside move for GoPro. I'll keep you up to date with that particular stock. Goldman Sachs, very neutral. I really like the stock selection, the stock analysis we had over the weekend. I'm still sitting very, very nicely on that bearish trade setup. It hasn't triggered yet, but it looks very, very nice. IBM is also one of those stocks which is broken out. I referenced that in a previous video. Another stock which I'm really liking as well at this particular moment in time, I'm not going to go into too much detail, is Netflix. I will give you a trade update on this over the weekend because we have let this stock reset. It is setting up very, very nicely for a swing trade. And to be frank, this is probably my favorite chart out of our list and out of other lists which I personally follow. Only a few selected stocks which I do follow outside of this list, which has got my attention right now at this very moment in time as I sit down and do this recording at the close on Thursday afternoon. A very compelling trade setup on Netflix, which I'll bring to your attention over the weekend as well. I'm very excited about this potential Netflix trade. It may break the drought of being, more so flat, being neutral in the market and not really getting into too many trades recently. This may usher in the next crop of trades, the next harvest, which we are soon going to see on a lot of individual trades. I'm excited to bring Netflix to you this weekend. Tesla at the moment is holding that support level. It's bounced higher, but we do have an inside day candle as well over here. So you can see that during today's price action, we've hit resistance for the second time, and we're simply starting to slow down. It looks as though we're starting to see potentially a reversal. We have a really nice little chart pattern here. This is a gap, which could be a complete breakaway gap, which is very nice to see. We'll analyze this more over the weekend, but you can definitely see the base, which we've spoken about in Tesla. And it looks to be, I guess, changing the trend direction, a nice little bull flag setting up, and we are beginning to move at least in the opposite type of direction to the underlying trend. It looks as if we're starting to break the downtrend. So that's a Thursday afternoon market recap. Again, just breaking down the three US markets, explaining why there's been a little bit of drought in the way of trade setups. I'm excited to bring you this weekend's pro analysis class, given that a lot of these stocks are going to move through earnings finally, which is good for us. I'll leave it at that. If you have any questions, email me. The link is in the description below. Have a great Thursday evening, everyone. I'll see you over the weekend. All the best. Goodbye.